Ever wondered what it means to own stocks in a company? It's like holding a slice of that corporation's future in your hands. Fascinating, isn't it? Together, let's embark on a journey of discovery into this intriguing world of stocks. Today, we'll delve deep into the world of stocks. So, what exactly are stocks? Well, think of them as golden tickets to the corporate world. When you buy a stock, you're purchasing a share of ownership in a company. It's like buying a slice of a giant corporate pie. This ownership stake represents a claim on part of the company's assets and earnings. You become a shareholder, an investor who has a financial interest in the company's success. So, in essence, when you own a stock, you own a piece of the company. You may ask, why should one invest in stocks? Well, one of the key advantages of investing in stocks is the potential for capital appreciation. This means that the value of your investment can increase over time, allowing you to sell your stocks for more than you paid. Additionally, some stocks pay dividends, which are regular payouts to shareholders. This can provide you with a steady income stream. Over the long term and across diverse markets, stocks have consistently outperformed other investment options. Historically, stocks have provided the highest potential returns. Not all stocks are created equal. There are common stocks, which give shareholders voting rights, and preferred stocks, where shareholders have a higher claim on dividends and assets. Stocks are also categorized by market capitalization. Large-cap stocks are from big, established companies, mid-cap from medium-sized companies, and small-cap from smaller, potentially faster-growing companies. They can also be grouped by sectors, such as technology or healthcare. Understanding these categories can help you build a diversified portfolio. Now, on to how stocks work. Investing in stocks is essentially buying a piece of a company. When you purchase shares, you're betting on the company's future success. If the company does well, your shares may increase in value and you can sell them for a profit. This is known as capital appreciation. Some companies also pay out dividends, a portion of their profits, to shareholders. The stock prices fluctuate based on supply and demand dynamics in the market. Remember, stock prices are driven by supply and demand. Where do you go to buy or sell stocks? Well, that's where stock market exchanges come into play. These are bustling hubs where shares of publicly traded companies are bought and sold. Major ones include the New York Stock Exchange and the Nasdaq. They act as a central marketplace connecting buyers and sellers from around the world. They ensure transparency, providing real-time trading information and maintaining fair trading conditions. So whether you're buying or selling, it all happens in these exchanges. These exchanges are the marketplace for stocks. Investing in stocks isn't without its risks. Like any investment, stocks can fluctuate in value, sometimes dramatically. One day your portfolio might be soaring and the next it could be plummeting. That's market volatility for you. And let's not forget, there's always the potential for losses, but don't let this scare you away. Diversification, spreading your investments across different types of assets, can help manage these risks. Moreover, investing should be a marathon, not a sprint. Always remember to diversify your investments and think long-term. Ready to start investing in stocks? Here's how. First, you'll need to open a brokerage account through which you'll buy and sell stocks. But remember, stocks aren't your only option. Mutual funds and exchange-traded funds, often called ETFs, are great for diversification. These funds pool money from many investors to buy a broad range of stocks. This way, you spread your risk across multiple companies. So, ready to dip your toe in the world of investing? With a brokerage account, you can start investing in stocks or funds. Investing in stocks isn't a set-it-and-forget-it game. It's crucial to keep a keen eye on your investments. Monitoring your stocks allows you to understand how your decisions play out and helps you make informed future choices. Staying informed about the market is equally important. Reliable sources such as financial news outlets, company reports, and market analysis can provide valuable insights. Remember, knowledge is power in the world of stock investing. Stay informed and keep track of your investments. So that's the world of stocks in a nutshell. Stocks are ownership shares in companies, offering potential for capital growth and dividends. They come in various types and are traded on major exchanges. Remember, monitoring and diversification are crucial. Consider stocks as a part of your investment portfolio. Seek professional advice if needed. Found this video helpful? Then show some love. Give it a thumbs up, hit that subscribe button, and share it with your friends. There's plenty more where this came from. Don't forget to like, subscribe, and share for more financial education. Stay tuned.